Hello guys and welcome back to my channel. Today I want to focus on 5 growth stocks that in my opinion are overlooked. These are growth stocks, so it means they don't pay dividends because they reuse the earnings to grow even more. Some examples are Amazon and Facebook. They haven't paid a dividend since the beginning. From a European perspective, I believe they're very tax efficient. If a company pays dividends, you get taxed twice for capital gain, appreciation, and because every quarter they pay dividends. So you would pay tax twice. These companies are, I believe in my opinion, overlooked and underrated. But it does not mean that at this time they are overvalued or undervalued. I'm just saying that they're not super famous, and in the future I can see that they will grow exponentially. It's an Amsterdam-based global payments company founded in 2006. Nowadays they have customers like Uber, Netflix, Nike, Tesla, Spotify, and so on. They act as middlemen between merchants, so a company like Nike, and payments group like Visa or MasterCard. This big company outsources to agent everything that has to do with payments. You're probably not understanding why would they do that. However, for a company like Nike, expanding to new region can be quite a hassle because it means more regulation, more payment options, and different currency that they need to deal with. Moreover, a company like Nike has multiple channel sales, online sales, mobile payments, and terminal at stores. This can be quite messy, and Adyen can provide an all-in-one solution for big companies, and they already have huge company as customer.
In this simple graph, you can easily see what Adyen is doing in the background. The merchants don't have to deal with it, Adyen takes care of it, and this is why all these big companies want to outsource the payments system.
Shopify is a Canadian multinational e-commerce company. They offer an all-in-one solution for online retailers. They provide everything they need to build an online store: payments, marketing, customer support, customer engagement, and so on. They provide all the infrastructure and all the support you need to create an online business. We already seen the trend in recent years that more and more physical stores are shifting their core business online. Nowadays, if I want to buy something, I just open my laptop and I search what I want. In 2 minutes I order it, in 2 days I have it in my house. So if you think e-commerce will be even bigger in the future, then you should definitely think about buying shares of Shopify. When there is a gold rush, don't dig for gold, but sell shovels. And Shopify is selling shovels. Shopify is a B2B business, business to business. Therefore, you hardly ever see it. It works behind the scenes of major online stores.
If you want to find out whether a big online store is running Shopify in the background, you can go on their website. For example, Heinz, which sells beans and ketchup. Then click on Inspect, which will show you the code, HTML. And then you search for Shopify in the HTML code, and if you find it, it means it's running in the background.
Intuitive Surgical is an American multinational company that designs and manufactures robotic products designed to improve the clinical outcome of patients through a minimally invasive surgery. So basically, a surgeon operates a robot which can be operated anywhere in the world thanks to fast connection internet, and through a console it controls this robot which performs the surgery. The possibilities are endless. Just imagine a super famous doctor from the US without leaving the US can operate in third world countries without flying, without the risk of something happening to him, malaria or something. Intuitive Surgical was the first one to propose such systems. Therefore, most of the surgeons have trained on their products because that's what hospitals have. It would be too expensive to retrain all the surgeons and buy new equipment. Therefore, I think intuitive surgical it will be the standard. I can see the interest rising for telemedicine, and if you see it too, then you should definitely think about buying a stock in this company. Veeva System provides cloud-based software that targets pharmaceutical companies and life science companies. Their company is used to manage clinical trials, have virtual meetings, and manage customers and data. It helps pharma companies to keep track of sales and operation while complying with health regulations all around the world. Almost all the big pharma companies already implemented their softwares. Its revenue is based on subscription, therefore is a constant cash flow. They have beaten revenue expectation for 20 quarters in a row. They have a lot of cash at zero debt. Beyond Meat produce fake meat. But what is fake meat? They are products that resemble meat, however, the meat is actually made of vegetables. It tastes like meat, but it's vegetable. We're seeing this trend that more and more people are becoming vegan and vegetarian, and therefore this company is trying to capitalize on that. It's difficult to become vegetarian from one day to the other. Therefore, this company with their product, they're trying to ease the transition. Otherwise, it gives an alternative to vegetarians that are not willing to sacrifice the taste of meat, or vegetarians that like the taste of meat but they don't want to kill an animal. They're expanding enormously, and they have partnership with McDonald's, Dunkin' Donuts, KFC, Subway. These companies understand the trend and they want to capitalize on that by making a partnership with Beyond Meat. They want to offer their customer an alternative. They only have another big competitor, Impossible Foods, but they're not listed on any stock exchanges. These were my 5 growth stocks that I believe they're overlooked by the major public. I hope you found this video insightful, and if you want to see more, please subscribe down below and let me know that you liked it or you didn't like it, and I'll see you next time. Bye guys!